let's go through our trades one more time, okay? Let's go through it. UVXY, I accidentally kept an order open. So I actually bought more of these 1424 call debit spreads. It was a very small order. It was like what I call a stink bid. It's called I just put a really low bid and see if it fills. So I had like a very small edition. It's nothing major, but I did add to 1424. I forgot to cancel that order. It did trigger. So I'm still long in my UVXY. I still think there's going to be one big vol episode before the end of the year. We'll see if we get there or not. 1424, I'm still long the 14, short the 24, long the 15, short the 20. I also got that 15-20 call spreads that we opened up about a month or so ago. Those are still at break even, by the way. And again, it's because we took advantage of that skew. Okay, we're putting the math in our favor here, guys. Okay, that's what checkmate trading is all about. Okay, so that's UVXY. What else are we looking at? We're also looking at DIA, the weakest of the indexes. Again, that IVW over IVE gave us the signal that this is going to be the weakest index. It is, in fact, the weakest index. It is still going against us, but not as bad as if we had done puts on the tech sector or S&P 500 as a whole. I am still long the debit put spreads from in October, long the 300, short the 290. Okay, I'm still in those. EEM, I'm still in my EEM puts for March 2023. It is the 39 puts. I'm still long also the FXI puts as well too. FXI, we still have those small, very small September calls that we rolled our August into for a little bit of extra credit. And also, my main though in the Chinese put, but my puts on the Chinese indices though is on the 31.26 put debit verticals, long the 31, short the 26. Okay, so that's FXI. Oh, and then Eurozone. Who can forget about the Eurozone? Okay, so the Eurozone, I still have my November put spreads, the 32.27. Okay, long the 32, short the 27. And so that I still have those positions as well. As far as risk management is concerned, I am out of all risk off sentiment options plays. So that's all the put spreads on the indices plus the call spread on UVXY. I'm out if we close under this 18-day moving average in the dollar. Okay, if we close under this 18-day moving average in the dollar, I'm out. All right, AUD, USD, if this closes over 6903, I am out of FXI and EEM. Okay, so that's my risk management. As far as future trades, SPY, if we get to 415 or so, I'm going to buy 3 to 6 month call spreads. 3 to 6 month put spreads. I'm going to buy put spreads if we get up here, if we just make a straight line up to there. If not, what I'm going to do is I'm going to start scaling in on shares at the lows that were made about a month ago. I'm going to start scaling in there, but most of it I'm going to start scaling in and 342. All right, and then under 340, I buy 12-month in the money call options on SPY. All right, oil, I'm still looking for that rally. I'm looking for that rally at this point right here at the 2 standard deviation Bollinger Band, 112. I'm going to start scaling into some put spreads just to alleviate my FOMO. But the real put spread buying, I'm going to wait till 118, 120. Okay? Future plans also, TSM, I'm going to buy put spreads that are 3 to 6 months out. Actually, I'm looking at the October spreads, 85.75. I'm looking for 250 or less, $2.50 or less to get that 3-to-1 reward to risk ratio. I think we get there by the 2 standard deviation Bollinger Band right here at 89 or so. Okay, so I'm waiting on that. All right, and that's when I will buy those put spreads. Again, October, I'm looking at the 85.75. Right now is just a little bit over that 250. I'm looking for that 250 to get that 3-to-1 reward to risk, TSM. Okay, what else? GLD, gold. Okay, this is a play that's going to take about a couple weeks most likely. Okay, so don't be getting too ambitious and don't be impatient on this. Gold usually, when it makes a low, it usually revisits it 3 to 6 weeks later. Okay, so if it gets to that 1680 again, I'm gonna buy that GLD call spreads, or maybe even call spreads on the gold futures, on the gold futures itself. But what I'm looking for is something about 6 months away. By that point, maybe it might be the January, maybe it might be the February or March expiration. But I'm looking for those like $20 wide GLD call spreads to really maximize the call spread skew on the gold market. Okay, so that is my trade plan, risk management. Indicators, guys. Again, we already talked about the dollar. Well, no, we already talked about the dollar. We already talked about the euro. Well, let's look at the euro chart one more time. Yes, so as long as this is going down, it's going to be risk off. And again, our junk bonds AD line is giving us a little bit of a mixed signal, so we will monitor that going forward. Okay, so there it is. Indicators, current positions, risk management, future trades. Boom, checkmate trading. And that's all she wrote.